You call the rally in tech, quote unquote, exceptional. I guess my question to you at this point, is it too exceptional?
Thank you, Scott. So I do think it's too exceptional. You know, it's been sort of the breadth of that rally has been pretty narrow. Some of the largest companies, tied to the artificial intelligence AI team has been sort of rallying tremendously, and valuations are very stretched. You know, it's hard to, say that it cannot go more, but we think it's in a sort of a little bit in a bubble domain already now. So I think it's too late. And I would think that we could see the pullback there. A little bit what you're seeing today now with the Nasdaq down 1.5%.
Why do you think it's a bubble? I mean, you can make two different arguments here. You can say, yes, I think that these stocks have just run too far too fast, but to go to the bubble step appears, to some maybe a little extreme.
Perhaps. Look, when we look at the sort of some of the valuations, expanded tremendously. If you have sort of PEs of 100 or 200, of course it can go more, but it's not something that, value investors should feel comfortable. I do have a little bit of personally value bias, So of course we cannot say that it can go more, but one do need to acknowledge the multiples, and also the fact that these stocks went up, technology went up in parallel with interest rates, so interest rates move higher and tech move higher, which, typically doesn't happen. So that also is a little bit of a worrisome signal.
So you hit the whole nail on the head here. Value investors, the ones who've been run over in large part by this move. At what point do you just say, you know what? This value move that I thought was legit isn't, and this is where the action is. AI is where the spending is. AI is going to drive earnings, and thus that's going to justify the reason why these stocks have not only come where they are now, but why they can even go further from here.
No, so that's a theme, that's a narrative, that's a sort of best case scenario, I would say. My argument a little bit would be that sort of AI is not a new thing. It's sort of at least 5 to 10 years development, and will be sort of for many years to come. But there will be sort of winners and losers. Some of the sort of shifts may be a little bit of a zero-sum game. So my counter argument would be that it's not something that happened sort of 3 months ago, and it's not 100% clear how it's going to play out. So when you see sort of every company that mentions AI rallying, that kind of, again, a little bit as an investor tilted on a value side makes me a little bit sort of worried.
Yeah, why aren't you more optimistic about the market overall in the face of, let's face it, it's been a stronger, more resilient market than I think you've expected it to be. And you're not alone. There are many who did not see the magnitude of this move coming. I've got the Dow Jones Industrial Average at 33,680. I've got the S&P 500 on the doorstep of 4,300.
No, so the reason why we are not more positive, and as you said, this resilience is sort of remarkable, and inflows are remarkable. The reason why we were not, primarily because of sort of interest rate shock. Over past year, roughly, we had a sort of 500 basis points increase in rates. We are going to have a sort of QT, and that's not even to sort of mention markets clearly don't care about geopolitics. They don't care about sort of energy crisis, but just the sort of increase in interest rates should have a negative impact, not just on a multiple, but also on economic activity. Fed at the end wants to engineer slowdown, so we don't see this as a new cycle. We think sort of this is a sort of the last innings of an old cycle, which sort of needs to end if Fed is going to sort of keep rates this higher and keep sort of rates in a quite restrictive area. So that's why it's hard for me to get excited. Of course, we need to acknowledge that markets show this resilience. Market is at the higher end of this range. I'm not yet convinced sort of that it's going to be breaking towards new high. I think we're probably at the higher end of the range, and over time, I think it's going to be very, very hard to move higher from here before Fed cuts the rate.